For our Chapter 15 assignments, we're going to start out with exercise 15.3, which is the multi-step income statement. So we are given a series of accounts and balances, and we're just to enter those into our income statement. So always we begin our income statement with our revenues. So we're given sales, sales returns and allowances, and sales discounts. And we'll use all those to calculate net sales. But notice we have another revenue here, interest revenue. We are only entering the revenues and expenses from operations to begin with. So this interest revenue will be only entered at the bottom under other revenues. So we can just skip this account for now. So let's go ahead and enter our sales figures and calculate the net sales. We're going to need that to calculate our gross profit. So sales returns is subtracted, and then sales discounts are subtracted. That's a total deduction from sales of $65.27. So our net sales is going to be $149,773. That's the $156.3 less the $65.27. Now we'll start with cost of goods sold. So cost of goods sold always starts out with beginning inventory figures. So we're going to start with our beginning regular inventory and then our beginning estimated returns. So that is $29,600. So total beginning inventory is $29,600. Now we need to figure out our cost of purchases. So we'll get the net purchases and then add the freight, and that'll give us our cost of purchases. So we begin with the purchases. Okay, so here we have our purchases, purchase returns, and purchase discounts. And then we have freight in. So that's all we're going to need to calculate our cost of purchases. Okay, so purchases were $112,000, and then purchase returns and allowances were $56.40, and then purchase discounts were $26.90. So we are going to subtract a total of $83.30 from our purchases, and that will give us net purchases of $103,670. Okay, we need to add the freight cost in for the inventory we ordered. So the freight is $875. So our cost of goods purchased will be a total of $104,545. So we know what we started the year with in our store, and then we've purchased $104,545 more, and we add those together, and it will tell us the total goods we had available for sale in our store. Now we need to start working on the cost of goods sold. So we know what we had to sell. If we know our ending inventories, we can subtract those and get our cost of goods sold. So we need our merchandise inventory ending balance and then the estimated return ending balance. So that would be $32,000 and $1,000. So that means our ending inventory equals $33,000. Okay, so I had $134,145 available to sell. Everything is gone except for $33,000. So my cost of goods sold is the difference in these two. That will be $101,145. That's the goods I had available for sale less what I now have on hand. So the $101,145 must have been sold. So of my sales, I had sales of $149,773. Those sales cost me $101,145. So my gross profit is the difference of $48,628. Okay, so here is the gross profit, and hopefully this gross profit is going to cover my operating expenses that follow. So we're going to pull the other operating expenses from our figures up here: wages, supplies, phone, utilities, insurance, depreciation, and miscellaneous. Remember, anything interest is always other income or expenses. So we had some other income up here, and then we've got an other expense here, and we'll put those at the bottom. But we'll list all of our operating expenses: wages, supplies, telephone, utilities, insurance, not interest, depreciation, and miscellaneous. So let's total all those. So total operating expenses are $42,890, which is going to give me income from operations of the difference of $48,628 and $42,890. So $57,38. Then I have my other revenue, which was interest revenue. That was $425. And then other expenses, which was the interest expense, and that was $4,700. Okay, now I'm going to net these two and enter the balance here. I had interest revenue of $425 and interest expense of $4,700. So that's giving me a negative number of $4,275. I'm not sure how CNL wants that. Let me see if it'll take a minus. I'm not sure about that. Yep, it did want the minus. Okay, and then our bottom line, or our net income, is $57.38 less the $42.75, which comes up with a net income of $14.63. Okay, so next we will, let's go to exercise 5.7. Now this one deals with adjusting, closing, and reversing entries. So we're going to look more closely here at that wages expense adjusting and reversing entry. So the problem is telling us that we have wages that were paid during the year of $20,800. So that's just telling us that before the adjustment we had $20,800 in wages expense. And then on B, it says the wages earned but not paid is $300. So that's what we owe. That's going to be our adjusting entry. So wages expense and wages payable will be for the 300. Now we need to complete the closing entry. Okay, so we know that we close revenues and expense accounts. The only expense account that we're given here is wages expense. So if we had $20,800 before the adjustment and we added $300 more, then we're going to have a balance in wages expense of $21,100. So we need to close that out, and we'll do that by debiting income summary and crediting wages expense for the $21,100. So now our wages expense account has been zeroed. So it's time now to pay the payroll in the next fiscal year. Remember, when we make this payment, part of the payroll is for the last fiscal year, and then the other part will be for the current fiscal year. So that's what we have to remember when we prepare the entries without making a reversing entry. So we've paid $800 is paid, which includes $300 of wages earned but not paid in December. So we know that our cash, we're writing a check or checks to our employees for $800. Okay, 300 of that was for the wages payable, and then the remaining 500 will be wages expense for the current year. Now, if we prepare these same entries using a reversing entry, it makes the payment of the payroll in the next year much easier. So the adjustment will be the same, the 300. And the closing entry will be the same. We'll debit income summary and credit wages expense. And now we need to do a reversing entry after the beginning of the next fiscal year. So to reverse out our adjustment, we just turn it upside down. We debit wages payable and credit wages expense for the 300. And now it's time to pay the $800 in payroll. So since we've reversed, all we do is do our typical payroll entry where we debit payroll wages expense and credit cash for the 800. And since we've done the reversal, the current year's wages expense will be 500 because we have going in to this entry, we have a negative 300 in wages expense, a credit, and when we debit for 800, that nets out to 500 in wages expense. And then, of course, wages payable was already zeroed out for us. So once again, the purpose of a reversing entry is just to make the next year's routine entry routine, so we don't have to go back and break down the payroll that was for the current year and the payroll that was for the prior year.